Aha, good morning, everybody. Once again, this is the 24th of April 2024. Yesterday, we did an analysis on gold and we were anticipating for buys, possible buys from this area to fill up this whole move down. There was a very clean move going down. So we were looking for a clean move going up and we actually got it. We got it. We got the move from here all the way up here, all right? So we got a move going up, which was very nice. Everyone that took this order must have closed with profits. It was a very profitable moment with this. So this is a very good, it was a very good move for us to trade. So let's see today. So yesterday we had two options. We were looking for either sales below this point, of which the market did not. As you see, what the market did is just spiked low, but it did not close. The candles did not close below 22.95. We were looking for possible sales below 22.95 and we didn't get any candle closing below 22.95. So what it did is just faked out to pick those people that had put already sell stops and pending orders. They were picked over here and then taken to the stop loss as quickly as possible. So that's one of the cons of using the pending orders. Sometimes the market may just do what do you call it? The market sometimes just does a rejection. It just does a fake out. Yes, that's the name. Yes, the market just does a fake out and then picks you and then takes you to the stop loss. All right. So now, this was a no trade area, as I wrote yesterday while we were doing this analysis. And today, and then after this no trade area was finished, the market did push up, and we see we have here a candle that, let me remove this so that you can see well. We have this candle that came up, closed above, all right? So the entry was from the next candle over here and pushing all the way to take profit up here. And if you took this order or if you are lot at this time, you must have made some good profit from this move, all right? So today, we are also still going to do another analysis on gold. Today is on a Wednesday. Before we do that, like always, we go first of all to, let's see what the market has for us over here. Okay. All right, so here we go. So today is on a Wednesday. We have AUD CPI is already passed. What else? We don't have any high impact news coming in. We have medium impact over here at 3:30. That is the core durable goods order, the monthly report, and the durable goods order, the monthly report as well with the USD. It's not really going to move the market that much, but yeah, I think it's a good day for technicals to continue ruling the market. All right, so we're here. I'm gonna remove again. I'm gonna do just what I always do every day. I'm gonna remove again. You have to practice something called consistency in the market, right? You have to practice consistency. It doesn't matter. I know right now we can just try to get an order from here, which looks like a very nice order to sell from maybe below this week over here and down to this point. We can actually get a very nice, good order for gold over here. But it's good to be consistent with your analysis. So I'm going to remove everything else again and then start again, start afresh. All right. There we go. We start afresh again. I know it seems like I'm repeating myself, but that repeating myself is what makes me more confident and gives me the consistency that I need to make sure that I do. And at the end of it all, I'm not having any side thoughts that maybe I could have missed something or something. No, it's because I'm doing it thoroughly. I'm doing a thorough analysis every day, every morning, thorough analysis. All right, highs and lows on the monthly, weekly. Right. By now, I think we've already caught the move. Yeah. All right, but it's good for the new people that are coming to see. So that's the monthly MR. MR represent the monthly high, monthly resistance. Okay. So the resistance is just like a roof. Support is like a floor, right? So this is monthly support. We are on weekly right now. So weekly we have this low over here. We have this low over here. Very easy. We have a weekly support down here. Weekly support right there. We go on daily. Daily we have a new support over here that needs to be checked. That's where the market came and spiked low and then started looking like it wanted to go up. All right, so that's the DS daily support. All right, so the highs happen to be almost the same. As you can see here, we have highs forming. At least we can do this as we can say this is the daily, sorry, the daily resistance. These are daily DR. Call that a daily resistance. H4, we are down to H4, down to H4. We have a new high over here where the market is as at now, right? So this was the daily support over here. So we're gonna put another H4 support over here. Probably around that area over here, like that. All right. And these over there. So we have H4 resistance. And we have H4 support. Down here. 1 hour, what do we have on 1 hour? This is what we have on 1 hour. So probably the same, yeah. They have the same, they share the same H4 slash 1. H4 and H1 share the same highs, the same resistance, but for the lows, they're not the same. Of course, you can see this one is a H4 support, but then we have another support over here. See? And you may ask yourself, why did I do this analysis? And yet I had seen this, I could still see it on the previous analysis. I just wanted to be thorough. Maybe yesterday I could have missed something, but today I get to find it out. But it's good to know that still the same analysis for yesterday was still valid for today's set to trade. Okay. All right, so there we go. If you go lower to 30 minutes, then you realize what we're doing at this point is we want to put a support over here, sorry. This is going lower to 30 minutes. We want to put a support down there. And the support is we're gonna say, I'm not so sure if it's a very good trading area. Let's see. It's from 23.23 all the way to 23.16. Yeah. The good thing with it is that with gold, you can actually just trade it. It's not like trading in currencies. Currencies could have been a very, it's a very small area for currencies to want to trade. But for gold, you can actually trade this. And if you have more volumes to break low, you trade this, okay? So we're gonna mark short positions over here from below that point all the way down here. This is a possible move. This is a very possible move. Let's see. But we put our stop loss not so far, but at least somewhere around that point. How about that? So here we do it's a possible, let me see, aggressive. Yeah, I'm calling this an aggressive sell because it's a very small area and it's really won't have a lot of confirmation. So if the market says it's to go down, it's just gonna go down straight forward to this point. Sometimes it can even do a whole 1 week to go all the way down. That's why I'm calling it aggressive. You have to do an impulse entry on that. On this, you have to do an impulse entry. Over here, we're going to save safe sells, possible safe sells. Possible safe sells below 23.16, 23.15, sorry, 23.15. Like that, and then we do a take profit down here. Boom, boom, boom. There we go. Take profit down there. All right, let's look for someone who's looking for buys. What are you looking at? So someone who's looking for buys, I'm going back to 1 hour. Right, we have an area over here that you should consider. And we have the next one over here that you should consider. All right, so we see. Long position. All right, so I'm gonna do it like this. I'm gonna first of all draw over here. On top of this wick, I wanna see a break above this line for me to get into a from that point. Of course, I put my stop loss just below this support over here if the market comes on top. And then we head on all the way, we push all the way up here to this point. So we could have possible buys above this point. Possible buys above 23.34. 23.3. Yeah. It is 34. This will be the first take profit over here. TP1. And we have TP2. And should we have more pressures, we're gonna go to TP3 up here. Right? Should we have some more push, bullish pressure coming in? That's a very good area for us to buy all the way up to this point. Very good area for us to sell below this point. And as you can see, the market, actually the candle wants to break right now as we hear. It's 10 a.m. right now. So this candle, we need it to close. But the thing is, you're gonna wait for the next 30 minutes. So around 10:30. That's when you're gonna know. This is the reason why I was calling it an aggressive sell, is because you see right now it's 10. The candle is right now, the candle that just started is pushing down. So before, see, the thing is, you have to wait for the candle to close. If this candle has not closed, in the next 30 minutes, this candle could push down to this point. That's why I was calling it aggressive, and that's why I was saying you can't take, the only thing that can help you at this point when it's an aggressive entry, it's impulse entry. Impulse entry are just the market executions that you do. You just do a market execution. You cannot do the pending orders on this. All right. So all in all, this is how our analysis today looks like. We could have possible sells below this point, pushing all the way down to this point, and possible buys above that point. All right. So there's something to keep an eye on. Let's watch today. Let's see what the market has for us in store. Right. Keep an eye. May end up getting a very good order over here coming in. So be sure to subscribe and follow for more analysis each and every day. Shall be sending analysis each and every day on gold each and every morning. Okay. Keep an eye on the channel and see and subscribe for alerts. Put alerts on them. All right, good. All right, so this is what we're going to be looking at today. This is what we focus on today. I myself will be looking at this point. I need this candle to close just bearish down here, and then I do an aggressive sell. But if should I realize some potential pressures coming in to continue to push the market down, I can do an impulse entry and a stop loss just above this wick. Stop loss just above this candle, the active candle right now, just stop loss above that point. Just to be safe, right? It's a safe. We want to do a safe entry. We want to do an order that is not so much on the risky side. So see, The pressures are coming in. Should we realize that the market is continuing to push down, you could do a quick sell. But when you realize the market is already here, if the candle gets over here, there's no need to get in. Just leave it. Start preparing for this safe sell over here. All right. So don't pressure yourself that you must take this and then you end up hitting stop loss or losing. Don't do that. All right. It's better to just wait for the safe ones over here. All right. So this candle is, see, it's already 4 minutes. It's just 4 minutes inside it. We still have 26 minutes to go for this candle to close. And if in 4 minutes, this is what is happening, what will happen in the next 26 minutes? Probably the market may be tapping down here in the next 26 minutes. So you don't know, but don't kill yourself because of that. Be patient, take the highest, always take the high probability setups that are coming into the market, okay? All right, guys, I'll see you tomorrow again. We review this analysis. We shall review it tomorrow, like we've done with all the rest. And if you see, since we started on Monday, we've been following up on previous analysis, and every analysis has given us a profit. It's been profitable, every analysis that we've done. All right. So keep an eye on this, subscribe for more, and take care of yourself. Don't overtrade. All right. Bye-bye.